This is Market Moves coming at you. We got another video on Aurora Cannabis, and after yesterday I did some more research, feeling a little bit more bullish about this stock, and stay tuned and I'll tell you the reasons why. But first, please hit that subscribe button. You won't regret it. I put out content all the time, and this video is basically a redemption video because, like I said yesterday, I made some mistakes in my analysis, and I want to throw that out there to everyone and make sure those are known. First off, I said the expenses were extremely high. They pretty much 10x'd from the last year, and this was mainly due to the legalization of marijuana in Canada, and this was what we call a one-off in accounting, meaning it's not going to happen again because these expenses will not reoccur because that legalization process only happened once, and that means that expenses will drop the next quarter, which is great because that brought the expenses up to $120 million. They're only bringing in about $30 million in sales for that quarter alone. So $30 million cannot pay $120, and it's not reasonable to expect that to be sustainable down the road. So what they did is they had these shares of TGOD, and those shares increased in price, and that helped them pay off those huge expenses. So that increase in their shares, the warrants that expired, the money they got from these shares was $144 million. That helped them pay the $120 easily, and a little bit left over for the investors to reinvest back in the company as well. So in my opinion, that is very lucky when you have a huge expense that comes up in the quarter, $120 million, and you need to pay it. I think it's very lucky that these shares increased and they were able to warrant them and exercise them and get them to pay the bills. But if this happens in the future, I don't know what's going to save the company. They're going to have to issue more shares. They're going to have to do X, Y, or Z. But this makes me a little bit nervous because they just got lucky this quarter paying those bills. But I'm just basically going through the mistakes I made yesterday and letting you guys know what happened in the video. So the other mistake I made was the shares issued were for acquisitions. They weren't for paying bills. They weren't for paying people. They were for actually acquiring companies, which is very bullish because if you think that the company is going to pay you what you got for it or double, that's going to increase the revenue each quarter, and that's going to make the investment worth it. So basically, if they bought these companies with shares, the only way it's going to make sense is if they get the same value each quarter from what they paid. And that is going to be seen in the revenue that we're going to see for the next coming quarters, the next coming years. So those share issues can help the company long term. I'm actually liking that. So these are some reasons why I looked into this some more and reasons why I'm bullish, because a lot of people called me out on my mistakes, and I'm not one to back down. I do more research and I understand what I did wrong. Basically show you what the company really looks like. So now we're going to get into the fun stuff. This is the actual valuation metrics of the company, and we're going to decide in the next 3 to 4 minutes if Aurora Cannabis is undervalued or overvalued, and we're going to see if it's a good deal. So this is marijuana valuations price to sales. This is the best way to compare companies because if the market cap's always changing and basically the shares are always changing, you really can't compare those. The price to earnings make no sense. But the only way to value companies that are penny stocks or early companies or IPOs is from the sales, because the sales are the biggest figure that we can look at that are going to change at a rate we can almost predict. So price to sales of Tilray is 140, price to sales of Aurora Cannabis is 120, New Beverage is 8, and then CGC comes in at 115. So these are very much in line with each other. The whole marijuana industry is valued at over 100 price to sales, and New Beverage is just a small company doing a small thing with CBD beverages. It's getting a price to sales of 8, which is higher than most beverage companies. So the greatest thing is that these valuations don't seem overvalued to me, because if you think about it, if their sales double the next quarter, then their price to sales is going to get chopped in half. It's going to go down to 60. And if their price to sales is at 60, then maybe the next quarter it's at 30. And then that's in line with many companies in the S&P, many companies that are publicly traded and with larger market caps. So we can expect the market cap to increase for these companies and we can expect the price to increase in turn. So these price to sales aren't that unreasonable, and the best thing is they're all within each other. So there's no like deals out there. There's no company that looks better than the other from price to sales, in my opinion, unless you want to go with New Beverage because they have the most upside from price to sales. But what I'm showing you from this screen is basically a bullish argument that all of the marijuana stocks are in line with each other and can increase if the sales double or triple the next couple quarters. So next screen is just the market cap so we can get an idea for it. Tilray is at $6 billion, Aurora Cannabis is at 6-ish again, and then New Beverage is at $390 million. So not billion like the other two. And then Amazon was $670 billion, but I don't know how that got on there. CGC is $9 billion. That's the one I wanted to show you guys. So those are the 4 marijuana companies. I like the 4 ones I'm interested in following, and these are all in the same realm for the market cap. Except CGC is a little bit higher. It's got more sales, so it can have a higher valuation. The next slide is going to get into just the ACB undervalued argument. So we're going to decide right now if it's undervalued and understand what can happen in the future to make the price go up 3x. So basically, if the shares are being issued every quarter, that's going to jack up the amount of shares in the company. So if I add 100 shares to this company, that's $600 I'm going to put on the market cap. So what I'm saying from this is basically if the shares keep increasing, the market cap keeps increasing. So right now we're sitting at 1 billion shares that are for this company, which means if the price goes up $1, the market cap goes up $1. So let's say in the next 2 years we add another 1 billion shares. So now if the price goes up $1, the market cap goes up $2. And at this point, the growth rate gets smaller and smaller and smaller. So this is a bearish case for this company. I saw a lot of shares being issued, almost double the shares that were out there. So the shares being issued is going to dilute the possible growth for the future because, like I said, if we have 1 billion amount of shares out there, if the price goes up $1, the market cap goes up 1 billion. If we have 2 billion shares out there, if the price goes up $1, market cap goes up 2 billion, which means we can get to $40 billion, $20 billion as the market cap in no time if we have too many shares out there. And that just limits the growth long term. So this is what I want to point out with this company. They are issuing shares which are going to limit the growth. So basically, here's an example here. If we triple to $15 a share, this puts us at 18 billion market cap. But if we end up adding more shares by that time, that's going to put us at maybe 25 billion. So the more shares we're going to add, the higher the market cap's going to be if we end up tripling. So if we get to 18 billion market cap, this is going to be larger than 200 companies in the SPY. And these companies don't have price to sales ratios like ACB. So unfortunately, I am not going to be bullish on this company if it gets that high and does not have a price to sales ratio around 50 or 20, because the companies in the index, the companies being publicly traded, are getting ratios that are reasonable, and they're not going to be valuing these marijuana companies in the hundreds. So basically, having a price to sales ratio of over 100 is something that penny stocks have, something that large growth companies have, and this is not sustainable forever. So eventually, they're going to only have to be valued at 50 or 20, and at this point, their market cap would be pretty high, and they would have to have the sales to back it up. So this is a bearish argument for this company. Basically, the shares being issued are stopping the potential reach for the company to triple or double or quadruple. And then the bottom half of this, I'm just going to give you one example of what would happen to get to $15 a share. At this point, sales would have to 10x to $500 million of yearly sales. So this is very, very possible considering sales were 50 million in 2018 and they already 4x their first quarter of 2019. So that 10x could come quicker than we think, or it could take 2 to 3 years. And at this point, are you willing to wait with this company while people jostle around trying to figure out what valuation it deserves? Because if you want to double your money in the next month or the next year, then you have to step away and say, hey, maybe this company is overvalued. Because if you're just here for the money grab, I don't think this is the right decision. But unfortunately, Many investors get blinded by what's happening in the news, what they're going to do, what acquisitions are coming out, and they fail to look at the numbers, because I can look at the numbers and tell you that this is not going to grow like you think it is, or this is overvalued. And I'm going to give you 3 examples of how I did that. Basically, AMD was hitting $30, $35, and everyone was super excited. They were buying it, bullish on it. Everyone was trading it, and I told them this thing's going to drop, this thing's going to crash, just by looking at the financials. And I did this 6 months ago, went before the crash happened, and I let everyone know it's overvalued. I did this yet again with Netflix. I was shorting at $420, which was the top of Netflix. I was shorting Tilray at $300, which was the top of it. So I can tell when things are overvalued, and I can let you guys know that it's not going to last forever, this growth, and eventually it's going to have to stop. In conclusion, I do think Aurora Cannabis is overvalued for the facts of the shares being issued are jacking up the amount of market cap the stock has without increasing the sales. So right now it's getting a price to sales ratio of 120, and if that drops off a cliff, you're going to see the stock price drop off a cliff. And if the shares keep increasing, the amount that the stock can drop is going to increase as well. So in conclusion, this is not a great stock to buy right now, and I do think there are some better options out there. But this is all I got. The Market Moves signing off. Peace. For more information on the Market Mover Indicator, free consultation talks, and courses, head to the website marketmovesmatt.com. Don't forget to hit that subscribe button and check out the latest and popular videos I have uploaded.